What is up, everyone? Welcome back to another video, and today we're going to be doing a deep dive into Rubrik stock. We're going to have a discussion about their business model, their growth catalyst, their finances, their leadership. We're going to run through my bull, bear, and base case for the stock and whether I think it is buy today. So without further ado, let's get straight into the video. So, business model. What does Rubrik actually do? They make backups that continuously authenticate every user trying to access important data. Basically, what this means is whenever a cyber attack does happen, Rubrik isn't doing anything to really prevent that attack. They make backups that are pretty much impossible for those attackers to access because most of the time when someone does a cyber attack, they're doing it against the company's um, data, and they're going to hold that ransom. So until the company pays the ransom, they're not going to have access to key information that they need to run the business. So what Rubrik does is when an attack happens, they can get everything up and running for the company immediately, so they don't have to deal with the company not being able to run either altogether or not run properly until they figure out how to get the data back or pay the ransom to the hackers. So that's basically what Rubrik does. They operate as a subscription-based software as a service, so a SaaS company. They have a reoccurring subscription business model, which is very sticky. And once you get into the ecosystem, it's almost impossible to switch over with the cost and all the training you'd have to do. And their moat is basically, like I said before, switching costs are tremendously high for any like SaaS related product, really. And especially when it comes to something as critical as cybersecurity. If you're a company and let's say you're using Rubrik and you see another competitor that's offering a cheaper price, you're not going to want to make a switch because then, oh, maybe you won't have as much protection, or maybe during the process switching over there might be a time frame when the protection for Rubrik runs out and you haven't fully switched over, and it's a lot of cost, and it's just something that most companies just aren't even going to touch. So once they pick Rubrik, they're going to stick with Rubrik. They also have deep ties with tech giants like Microsoft. So across all Microsoft platforms, everyone's using Rubrik. And overall, their business model is an extremely good one, and it's growing a ton. Speaking about growth catalyst, ransomware attacks have gotten more and more common as time goes on. As technology progresses, there's going to be more and more attacks, and AI really amplifies this even more, in my opinion. If you look at what AI is capable of doing now, what do you think it's going to be able to do in a year, 2, 3 years down the line? Like right now, it's already capable of assisting hackers getting into companies' data and stuff like that. So it's going to continue to advance, and it's going to continuous to be a extremely red flag for these companies to monitor. So what that means is they're going to end up spending more and more money on cybersecurity. So it's going to go to companies like Rubrik. Rubrik recently launched their Cloud Agent, which manages risk for enterprise AI agents, making Rubrik at the forefront of AI data security. Over 60% of cyber attacks target SaaS applications, but there is a gap in protection in data suites like Microsoft 365. This underprotected area is a huge area that Rubrik is very well positioned to expand into, so they're really going to capture that market share, and there's not a whole lot of other competition for them. They also have a net retention rate of over 120%, and I just want to highlight this really quickly for you guys. 120%. That means that existing customers spend 20% more every year. And this has no extra real marketing cost or any cost for the company to get these customers because they're existing customers. It's not, oh, some people drop off. This is 120%, which is an insane net retention. Normally you think of net retention, you're like, okay, maybe you get 80, 90%. So maybe what, 10 or 20% of people stop using the platform. 20% of people are spending even, or existing customers are on average spending 20% more every year on the platform. And this is just extremely positive signal, especially if you consider, if you really just think as AI and technology advances, cybersecurity attacks are going to become more and more common. That's pretty much a fact. That's not even a real prediction. That's basically what's going to happen. And from that, you can derive that companies are going to spend more on cybersecurity, which is also pretty much a fact as well. So if you look at that and you look at this, Rubrik is going to continue increasing this as time goes on. So that's a huge growth catalyst for the company. Going on to their finances, the company is growing rapidly and hit 1.3 billion in revenue, up 48.5% year over year. Subscription ARR grew 34% year over year to 1.35 billion, and the company does operate at a GAAP net loss. So there are three main reasons for Rubrik operating at a GAAP loss. First up, and pretty much the main one, it's going to be the stock-based compensation. So they spend a lot with stock-based compensation to attract top talent to the company. And if you look at smaller companies, a lot of smaller companies do this. It's something that you obviously don't love, but it's pretty much something that every smaller company would do. So it's acceptable because you want to bring in the best people, because if you really believe in the company, you're going to want to have the best people there to help propel it forward, not just pay the cheapest price out there to just get some nobody who isn't going to better the company as a whole. They also have multi-year revenue from contracts, and this contract revenue takes a while to really get recognized because they're paying over time, but the actual cost of getting that member or getting that customer on board is pretty much paid up front, whether that's advertising or whatever it is. It's paid up front, and then you're going to see the revenue come in as the years tick on. So that's another reason. And then also Rubrik is spending aggressively in sales and marketing to capture market share in order to stay ahead of the competition. And you look at Rubrik, it's one of the best in class in the space. So I'm completely fine with this. They have the revenue growth to back it up. So as long as they continue doing what they're doing, I am perfectly fine with this aggressive spending. And more importantly, gross margin sits at 80%, and the company is generating over 250 million in free cash flow. So very high gross margins. The company is growing very fast. Obviously, it's not profitable yet. I believe it will be, management has predicted in 2027, early 2028 for profitability to really turn. Onto management. They have a strong beat and raise culture since becoming a publicly traded company. And the co-founder and CEO, Bipul Sanan, I might have pronounced that incorrectly, but he's done a pretty good job setting up the company for where it is today. Obviously, they're not in their peak form yet. They're in kind of a setting up phase going up to that peak form. And if you think of it as a exponential chart going up like this, they're just at like this point here where it's, I think at least, it's just going to start really seeing that acceleration. And I think that they've done a great job transitioning Rubrik from kind of an older on-premise hardware backup kind of company to a new age cloud native cybersecurity platform, which is extremely impressive by management and the CEO. And another thing to take into account is that insiders own over 70% of outstanding stock. So that's quite a large amount. And all the top figures or all the important people in positions in the company have huge equity positions. So a lot of management's personal net worth is tied up into the stock, which is something you like to see because that really shows their conviction in the name. On to bull, base, and bear case. Bull case, I have this at a 30% chance of happening. Continue execution makes Rubrik a pillar in cybersecurity. Gross margin continues to expand, and GAAP gross margins are already at around 80.5%. So this base of such a high GAAP gross margin creates a really solid profitability foundation. And this isn't even just in the bull case. This is just in general. This is real. This is now. But gross margin in the bull case would continue to expand further on this already highly profitable base. Net retention rate either remains similar or gets higher. I'm pretty sure for a bull case that it would just get higher. So let's get rid of that. Net retention rate gets higher. And I think this is a very likely chance that it does get higher because I don't really see it going lower, and cybersecurity is going to become a bigger issue on these companies' radar, so they're going to probably end up spending more and more. Stock-based comp slow down as the company matures and the company turns profitable when management expected end of 2027, early 2028. So it's on target with that. And if this were to happen, the stock would produce a 30 to 40% year-over-year CAGR return over the next 5 years. So that's 30 to 40% a year, 5 years. Pretty solid case. On to base case, this is the thing that I think is most likely to happen. Rubrik continues to capture market share. Their gross margins expand slightly and net retention rates stay similar or a little bit higher. Company turns profitable 2028 and stock-based comp slows down once the company does turn profitable. It would produce a 20% year-over-year CAGR return over the next 5 years. This could be a bit higher, but I will talk a little bit about why it might be lower at the very end. And bear case, this is the least likely 5% chance I have on it happening. I just don't think this is going to happen. Growth would have to decelerate as the market gets saturated. I don't see that really happening because I think cybersecurity is just going to become a bigger and bigger industry over the coming years. Profitability takes longer to occur, meaning stock-based comp remains higher for longer. Rubrik only captures a little bit of market share, and the company would basically, in this case scenario, become a slower growth like cash cow business. And in this case, it would be pretty much flat for the next 5 years. But I don't see this happening. I put a 5%, but this is I don't think there's a world where this happens. Anyways, is the stock a buy today? $100 right now. I'm up over 75%. Now listen, the reason I have this at 20% is I think that there might be a drawdown in the stock coming shortly. Because if you look at Rubrik or cybersecurity stocks in general, Rubrik's up over 100% from the lows from a few months ago. CrowdStrike, Palo Alto, both up like 150%, something along those lines. And I do agree that the companies were a lot extremely undervalued then. It was a lot of SaaS fears and obviously unwarranted. However, I think the companies have had quite a run up over a short period of time, not really with any fundamental changes or earnings or something like this. Obviously, I think the thesis is still intact for the company. It's just that I think a 20-30% pullback is decently in the realm of possibility, especially before on earnings, maybe because there's a lot of high expectations going to earnings. If they report good earnings but not like super good, it could drop. So I personally would have the stock as a buy today if you don't already have a position. So I would say accumulate a little bit of a position before earnings, see what the earnings are, and then you can decide from there based on where the stock moves. And if you already own a decent amount of the stock, I would probably say it's a hold and just kind of see what happens after earnings. If the stock goes up, okay, stock goes up 20-30%. If the stock goes down 20-30%, buy some more. And yeah, that's the reason why I think this base case is a 20%. If you were to wait until after earnings and the stock does drop 20-30% or maybe a little more, something like that, I think this could push up to a 25%. And obviously, a lot more of this growth is going to be in the beginning, 1 to 3 years, as opposed to the last 4 to 5. So keep that in mind. But baseline, I think that the stock is a moderate buy / hold right now, depending on if you own it, if you don't. And also, this pretty much goes for the whole cybersecurity space. I think for any of these names, taking a little profits now before earnings might not be the worst idea. Anyways, thank you guys so much for watching. I hope you guys really enjoyed. Leave a comment down below with a stock that you would like me to research next, and I'll feature you guys in my next video. Other than that, thank you guys so much for watching and have a great day.